All right, for all you Canadian tech founders out there, this is for you. We're going to create the ultimate roadmap, breaking down exactly how you can go from that brilliant idea scribbled on a napkin to a fully funded company. How? By connecting with the right angel investors. So let's dive in.
So you've got it, right? That world-changing idea. The one you've been pouring your heart and soul into, convinced it's going to completely change the game in your industry. But there's always a but, isn't there? There's that one little hurdle, that gap between your amazing prototype and a real market-leading company. You need the cash to make it happen. And if that sounds familiar, you are in exactly the right place. Because look, the whole scene for early-stage funding in Canada is seriously heating up. The latest data shows this huge rebound. We're talking a 27% jump in total angel investment, hitting an incredible $146.2 million. Confidence is back, and that means the opportunity for founders who are prepared is just massive.
Okay, so how do you get a piece of that pie? Well, your quest really begins right here, by understanding the world you're about to step into and figuring out who exactly you're looking for.
So who are these angels anyway? Well, they're not some faceless bank. An angel investor is a successful person, usually an entrepreneur themselves, who is putting their own personal money on the line for your company. I love how the source material puts it. They're more than a check, they are a co-pilot for growth.
And this slide, this is so important. It really breaks down the difference between angels and venture capitalists, or VCs. See, angels jump in way earlier, at the pre-seed or seed stage. They're using their own money and they're often motivated by the chance to mentor someone. VCs, they usually come in later with big institutional money, and their focus is pretty much all about the financial return. So you know who you're looking for. Now comes the really critical question. Are you ready for them? Let's run through what we're calling the Angel Ready Founder Checklist and see if you're truly prepared for the journey.
First up, your foundation has to be absolutely rock solid. I'm talking a clear strategy for your IP, the right corporate structure, which in Canada is often a Canadian-controlled private corporation or CCPC, and a clean, simple cap table that shows exactly who owns what. Trust me, a messy foundation is a massive red flag for any investor. Next, you need traction. Now, the source material points out that Canadian angels can be a bit more conservative. They want to see some proof, but this doesn't mean you need huge revenue. It can be things like key metrics, your monthly recurring revenue or customer acquisition cost, or even just pilot projects or a growing wait list. The main takeaway here is you need some kind of data that makes the investment feel less risky for them.
And this brings us to one of the oldest sayings in investing. You bet on the jockey, not the horse. Your team is everything. Investors are looking for founders with skills that complement each other, deep expertise and resilience. At the end of the day, they are betting on you and your ability to figure things out when stuff gets tough.
Okay, so you've got the foundation, you've got some traction, and you've got the team. Now, it's time to tell your story. Let's get into crafting a really compelling pitch. Think of it as the map that's going to guide investors straight to your vision.
Your pitch deck is really just the visual story of your business. It needs to flow, you know? Start with the problem you're solving, then present your elegant solution. You've got to show the scale of the market, share your traction so far, introduce your killer team, and then finish with a super clear ask, exactly how much money you need and what milestones you're going to hit with it.
And here is an absolutely golden pro tip from the source material. The headlines of your slides, all by themselves, should tell a complete story. Seriously, if an investor can just scan those headlines and get the gist of your entire business, you have nailed the clarity you need. Your pitch is polished. It's ready to go. Now for the million-dollar question, how in the world do you actually get in front of these people? Let's talk about the best ways to actually get a meeting. Okay, forget cold emails. They almost never work. The absolute gold standard is a warm introduction from someone you both know. Beyond that, pitching to organized angel groups is super efficient. Getting into an accelerator gives you a stamp of approval that opens a ton of doors. And hey, don't sleep on government grants. Getting that non-dilutive funding makes you look like an even better bet.
You did it. You made the connection, you pitched your heart out, and they're interested. That's awesome. But now you enter the final trial of your quest, actually closing the deal.
This part is called the due diligence gauntlet for a reason. The investor is now going to check every single claim you've made. They'll dig into your financials, your legal stuff, your tech. They'll even want to talk to your team and some of your customers. The key to getting through this smoothly? Be organized, have a virtual data room ready, and just be totally transparent.
So, how does the deal actually get structured? Well,
At this early stage, it's usually with one of these two things, a convertible note or a safe. Both are basically designed to put off that really tricky conversation about what your company is worth right now. You can think of it like this. A safe is simpler, kind of like a promise for future stock. A convertible note is more like a loan that turns into stock down the road, and it often rewards that early investor with a nice little discount.
The money lands in your bank account. The deal is done. Time to celebrate, right? Well, yes, but here's the thing. The journey absolutely does not end when the check clears. In fact, it's just beginning.
The most successful founders totally get this. They make sure to leverage their angels' mentorship, they stay completely transparent, sharing the good and the bad to build trust, and they set up a regular rhythm of communication. You have to remember, these investors can be your biggest champions and make those critical introductions for your next round of funding.
So let's be crystal clear about one thing. Getting the investment is not the prize. It is not the finish line. It's the fuel for your journey. It is the very beginning of a critical, long-term partnership that could honestly define the entire future of your company.
And that really is the ultimate takeaway. You're not just looking for a check, you're looking for a co-pilot. So as you set out on your own quest, the most important question you can ask yourself is this: who will you partner with to build the future?